So, Michelle, are you going to put everyone in closed session? Yes. Thank you.
ahead and call this meeting to order, and let's go around the room and do the roll call. Andrew, are you here?
Here.
David Kwan, are you here? Sunita, are you here?
I'm here.
Howard, are you here? Eshrar, are you here?
I'm here.
Dick Santos, are you here?
Yes.
Franco, are you here?
Yes.
Dave Wilson, are you here? I'm Chair Lanza. I'm here. Roberta, can you or Linda or Michelle confirm that David Kwan, Howard Lee, and Dave Wilson are not yet on the call?
Actually, they just
Chair.
joined.
He just
Okay.
joined.
Thank you, guys. Newcomers are doing roll call. David Kwan, are you here now? Does he appear to be here, ladies?
Yes, he's on, but he's
So-
on mute.
He's not responding, he's here, but just let the record show we have him on Zoom call. Howard Lee, are you here? And is he on, ladies?
I
Howard,
did not see him.
I don't see Howard.
He'll be on. And Dave Wilson, are you on?
I believe I am. Can you hear me?
Hi, Dave.
Let's go back to David Kwan. Looks like he's on, but he's on mute. David?
Let it be known that Wilson has found the second level of Zen mastery, all to hear. All right, let's go directly into closed session. Ladies, go ahead and trigger our closed session. didn't do item 1B. That is on our agenda later, but that's been postponed. 1A was about the performance reviews for Purdue. We had those reviews earlier this week. We're not going to report out because reviews are confidential. Later on the agenda, though, the public part where we talk about compensation will address the results of the review and our recommendations for compensation right out in the open. Okay, so we've already done roll call. Orders of the day. Give me a second here. So in general, Zoom, if you have a temporal question, go ahead and interrupt it. We've got good Zoom etiquette. I'll always go around the room for a vote. And on big items, I'll also go around the room for comments. And then don't forget, we have to do AB 361 after the board meeting. So everybody when we adjourn this meeting, stay tuned. We don't have to wave sunshine on anything. It says here, if anybody, any of our retirees, the public wants to make a comment.
Excuse me, Drew. I'm so sorry, but there is a change to the agenda that was in the orders of the day that needs to be read. It's on item 1.6A.
I see it here. Okay, deferred vested member Lamont J. Cousseau, police sergeant, requesting a new retirement date of October 2nd, 2022 per request received 8/9/22 after agenda posting. And that's, thank you so much, Michelle. And that's part of the consent calendar, right?
Yes.
Great. So I'll make sure when I ask for motion consent calendar, I'll include that. And I already mentioned that item 3A has been postponed. There was a personal issue that came up with council, and we were more than happy to accommodate council with that request. So anybody from the public want to make a comment?
Mr. Chairman, on that point about agenda 1.6A, if there was material received after the posting of the agenda, you'll need a motion to waive sunshine.
Good point. So that one's on you, Michelle. It says we don't need to waive sunshine. That's fine.
I'm sorry. No, there's no material. It was a request that came after the fact to change the retirement date.
Well, I can't see the agenda if you'll scroll that down.
Oh, sorry.
It's 1.6.
Yes. So, right. He changed his date to September 10th. This was originally what he had requested. However, staff got an email on Monday afternoon requesting a new change to October the 2nd. So in light of that, we just decided to try to make that change in orders of the day.
Okay, why don't we do it this way? It's on the consent calendar. When there's a motion to accept consent calendar, let's pull item 1.6A and separately approve it with the new date. Okay.
Okay, that makes sense, right, Harvey?
Yeah.
Okay,
so let's pull that off consent calendar and then adopt consent if that's the board's desire, and then come back to 1.6A and accept the amendment to the effective date, whatever. If it's not September 10th, it's whatever else you're going to tell us, and do that by separate motion.
Great. So we're there now. So Michelle's asked us to pull item 1.6A from the consent calendar. Is there anything else on the consent calendar anyone wants to discuss or pull? All right, if not, I'll entertain a motion to approve the consent calendar.
So moved by Santos.
Second by Gardenier.
Andrew, how do you vote?
Aye.
David Kwan? Sunita?
I'm here. Yes.
Eshwar?
Yes.
Dick?
Yes.
Joe?
Aye.
Dave Wilson?
Aye.
That's great. I'm Chair Lane. I vote aye as well. Per Michelle, we pulled item 1.6A. I read it earlier, but the basic gist is the date that was on there, the retirement date is now October 2nd of 2022 instead of August. Oh, hang on. Well, that's the new date. I'm not quite sure what the old date is. Doesn't matter. Do I have a motion to approve that new retirement date?
So moved by Santos.
Do I have a second?
Second, Wilson.
Motion by Santos, second by Wilson. Let's go around for the vote. Andrew.
Aye.
Aye.
R.
Aye.
Yes.
Go.
Aye.
Steve.
Aye.
And I'm Chair Lands. I vote aye. Harvey, you must agree with my mother who once said to me, you know, Drew, you do everything wrong the first time and everything right the second time. I don't know how you manage that. So, we're good now. We're all buttoned up on that, right, Harvey?
All good.
All right. Over to you, Prabhu.
All right, thank you, Mr. Chairman. We have a few things on the agenda for investments. This morning, Makita will and Newberger will do a deep dive on last fiscal year's performance. But before we get there, I do, as I always do, share pro forma performance numbers. Fiscal year to date, police and fire plant up 2.1%, healthcare trust up 2.06%. The numbers that I reported last month were higher. It's because August was a tough month. The S&P was down a little over 4%. And so obviously with our beta at 70%, that did cost us. But before I hand this over to you, Mr. Chairman, for 2B, if the board will just indulge me for a couple of minutes, I want to share a chart in a few minutes. So Makita's a report later will show that we finished in the top quartile, right? And a 3-year number. So our 3-year number is in the 21st percentile, I believe. Now, what's the value of that, right? Steve McCourt, CEO of Makita, recently said, there are no victory laps in investing because the race never ends. And you have to post good returns year in and year out, right? You can never rest on your laurels. But sometimes I think it's okay to pause and see what we've done and pat ourselves on the back for a job well done, right? And this is, I know this is shameless self-promotion, but I think I ought to do it once in a while. So, you know, historically, we've known that our returns were, you know, if you look at the 10-year number, it's still in the 97 percentile, so in the bottom 3%. And for many years, we were in the bottom 1% of our peers, right? And the reason for that was we didn't know what the beta of our portfolio should be. In other words, we didn't know what our risk tolerance was, right? And therefore, we didn't know how much we should have in growth assets. And your predecessor board, and 4 of those members are serving in the current board, made a very, very clever decision a few years ago and said, let's do a study and let's find out what the right risk tolerance for this plan should be, right? And Drew, you've mentioned this before. You had an offsite, and you hired Veris. This was just before I got here, and Veris said, "Look, I think your target should be 12%, right? You're in the range of 10 to 12, but your target is 12%, right?" And you all gave that information to the investment team and said, "Here, you guys take this and do what you want with this." And we looked at the market. So and the current team, investment team, has been managing this portfolio for 4.5 years. I got here 4.5 years ago, and the market was expensive. It wasn't cheap. So what we did, in fact, we made quite a drastic decision in increasing our low beta assets. We increased our cash position. We were an outlier compared to all our peers. We had 20%, 25% in T-bills, right? And people looked at it and said, this is weird. I mean, who has so much money in T-bills? But we did that. It was a bold move. It was a board approved move. But we always had in mind that 12% number and said, we will increase our risk at the right time and we'll hold to that risk target. And we got an opportunity in March 2020, right? And we increased our risk. So we took that T-bill allocation and we put it in growth assets, and we increased our growth bucket to 75%. Now, why is this important? Because growth assets are the only ones that are going to beat our bogey. The rest of the allocation is simply for diversification and for liquidity. What we really need to know is how much growth assets should we have, right? So I thought I'll do a simple exercise, and Laura was very kind to run this. And I said, look, had we been in the 99th percentile, had we continued to be in the 99th percentile, what would our returns have been? And our actual returns, we are now in the last 3 years, we were in the 21st percentile, right? So what's the differential? That differential is the value added by this board and your predecessor board and the investment team with data from our consultants. So this is not fuzzy math. This is very simple, right? There's no benchmark here. We're just talking absolute returns, right? This is how much we returned. Had we continued to be in the 99th percentile, what would the returns be, right? So Laura is going to share her screen. We just got this done yesterday. So Laura, if you don't mind sharing your screen.
It says the host has disabled participant screen sharing, so I might need some help from the admin staff.
I'm sure staff will give you permission soon. Yeah, there you go.
Okay, perfect. Good morning. Oops, this is the backup in case I needed the data here. But good morning, everyone. Nice to see you virtually and hope to see you in person again soon. Here is the analysis that Prabhu mentioned. So it is back of the envelope, but it is, I think, a really good estimate of the difference here. So we looked at the dollar differential between the actual plan performance and the 99th percentile of the peer group. And honestly, I was somewhat staggered by the magnitude of the dollar value difference. It was almost $1 billion in value between over the last 3 years combined. So looking at fiscal years 2020, 2021, and 2022, the total difference in year plan performance relative to the 99th percentile of the peer group, which is public defined benefit plans over $1 billion, and that typically has about 60 or 70 constituents, was $975 million over that 3-year period. And just as a little aside, we at Makita, we're doing a training workshop on the use of storytelling in client presentations, and we were asked to sort of come up with a story where, you know, there had been some sort of challenge and it was overcome, and workshop that story just sort of for our internal purposes and practice. And the story I used was how, you know, there was a more conservative bent to the San Jose city plans for a long time, and even when the absolute returns were quite strong, the peer relative returns looked weak, and that was sort of disheartening, even though it was something that was intentional and strategic, and your boards and your staff actually put in place the sort of governance and risk measures and planning such that when things fell in the early pandemic days, I looked back at the dates of the meetings. I think between the 2 investment committees and boards, there were 6 meetings in the last 2 weeks of March and first week of April of 2020. And I think I blocked out some of that work when things were shutting down. But I really think it's a credit to your boards and your staff that you were able to add this much value relative to the peer group by your strategic planning and governance model, and take advantage of the market environment.
Hey, Laura, you don't live in the Bay Area, do you?
I don't. I live in the San Diego area.
Laura, are you up in the Bay Area anytime between now and the end of the year?
I'm up there quite a bit, actually. I'll be up there in a few weeks. I have another client in San Jose and a client having a retreat in Monterey.
Hey, let's, if you're okay, let's you and me and Prabhu grab Vince and take him out for a celebratory beer, because this is all Vince, right, Laura?
I think that's a great idea. Vince was a major, you know, a major impetus, I think, for or someone who inspired the group to hire, you know, Virus and Cortex and work with Makita and obviously bring in new staff members and the new governance model. So yes, I agree. He had a big part in this.
And the reason I interrupt Laura to say that is, okay, guys, but it's a surprise party for Vince, so don't anybody share this chart with him, because this is a mind-blowing chart, right, Laura? This is amazing.
Yeah, I was really surprised at the magnitude.
All right, back to you, Prabhu.
Yeah, well, thanks, Laura. So I just want stakeholders to see this, right? $975 million. I mean, our assets at the end of June was 4.5 billion. Had we just stayed the course and not done anything, not made all those decisions where the boards actually said, we need to find our risk tolerance, we need to find our risk budget, we need to up the risk at the right time. Had we not done all of that, we would have been, our assets would have been 3.5 billion, 3.6 billion and not 4.5. And that's huge. That's huge. And people don't recognize the value of beta. So anyway, that's the end of that shameless self-promotion, but more to come in future months. But with that, Mr. Chairman, I'm happy to take questions.
Floor is open. Any questions? I will make one comment for the group. This all ties back to a meeting in February of 2012, now over 10 years ago, where Vince proposed doing this. And I'll remind everyone, we're going to start really talking to the city about this. The basic concept, and Prabhu and Laura just said we executed, was, look, we have a plan, our actuary said, and it's true, that it's more sensitive to downside risk. If the market goes down, we have a much bigger impact on the city than many similar plans. And for that reason, as Prabhu said, the core of our portfolio, the beta, the riskiness of assets is lower than most plans. And if all we did was passively invest that against benchmark, we would consistently be the worst performing pension fund in California. Well, of course it wouldn't be. We aimed for a low return. We got a low return, but the way people think, yes, but they got 8%, you got 6%. We tried to get 6%, they tried to get 8%. And Vince's idea, which Prabhu and Laura have said actually is working, was, well, there's only two knobs on the wall. One says beta, the inherent risk of the assets, and the other says alpha. Well, the alpha is, I'm not going to invest passively against benchmark. I'm going to cleverly select managers or invest it myself. And as Prabhu just said, strategies like the one we did, right? And it may be the case, and Vince is now being proven right, that a low beta plus a lot of hard work on alpha may allow us to have a discount rate that's comparable to our peers. Well, they're not our peers because we're more sensitive to risk, right, Prabhu? But you and I have talked this many times, and I think Prabhu seems to be working, that we might, in the near future, have a beta plus alpha that brings us back up more to like 7%. Is that reading tea leaves too much, or is that what we're talking about here?
Well, that's quite possible. In fact, Makita has revised its capital market expectations recently, and it's revised upwards. So we could well do, target that 7%. But you're right, Drew. So the 975 million is the beta plus alpha. So you said it right.
Yeah. All right. Floor is open. If not, Prabhu, you have the floor. Just keep driving through your sections.
Okay. Well, I think that's the conclusion of 2A, and so 2B, I believe, is your presentation, Mr. Chairman.
Thank you, Prabhu. So I wasn't brought on this board because of my financial acumen, because I really don't have any. Venture capitalists, while you may think of us, and I guess we're bankers, we handle money, we don't really know anything. Everything I know about alpha and beta, I either learned here at the Harvard Business School 35 years ago. So it did turn out a year or two ago, Prabhu said, well, actually, Drew, you do have financial acumen we could use. We're launching a venture capital program. And fortunately, Howard is on the board. So Howard and I think, have been pretty helpful. I can personally say that 2 or 3 of the top decile funds we're in were because I knew people. And I said, Prabhu, be your charming self. And Prabhu is very charming. And they've all told me it's great to have San Jose. And I talked about you guys, Franco and Dave and Andrew and Dick and the brave policemen and firemen of San Jose. And that works, by the way. Prabhu and I have used that hook many times, and it's very successful. So we have a wealth of riches. For the first time ever since I've been on this board, we actually have 5 independent board members, all of who have relevant expertise for the investment committee. Minor problem, the investment committee can only have a subquorum of the board, 4 members. And it's important that the investment committee have either a retired or active service member. We're very fortunate to have Andrew in that role. So we can really only have 3 people on the IC. Well, it works out because we've got 3 people, Sunita, Eshvar, and now David, who are really good with what the IC mostly does, the bulk of our money, right, which is in public markets. But the efforts that Howard and I put in, the initial efforts are winding down, but Prabhu came to Howard and I a couple of months ago and said, I'd still like to make use of your talents. And so we looped in Eshvar and we said, can we sort of split the VC part of the IC out of the IC? And Harvey weighed in and said, yeah, there's probably a way to do that. We need to kind of work on that. And so we'd like to create an ad hoc committee. I'd like to chair it, so that will require a motion to create it from someone. I guess Harvey told me I have enough power to create an ad hoc committee as long as I don't chair it, but I sort of have been chairing it. Peru and I are basically chairing it. And so the goal of this committee will be by next June, when David Kwan is ready to go on the IC, as it says in the memo, talking about, okay, what is the role of staff, the role of the board, the role of any board member VC such as Howard and myself in putting together the IC staff, the board, and expertise in a way which is legal and efficient. Is that a good summary of what we're going for here, Prabhu?
Yes, Mr. Chairman. I'm sure Harvey will want to weigh in on this. But also, I think you probably made the point. We were also thinking about, how do we, all asset, staff has delegation of authority for all asset classes except venture. And so the committee, part of the committee's mandate will be to figure out whether venture can also be delegated to staff, and what, if any, steps need to be taken, and that's also one of the roles of the committee.
Right. So if the committee works out well, in about 9 or 10 months, you'll see, and we'll probably end up looping in your governance committee, Franco. We'll looping in saying, okay, we have sort of special asset class, we have special resource. How do we deal with it? It says the committee includes Harvey and Peru. Of course, they can't be on a board committee if they're not board members. But when Sean Calder was chairman, we said, whenever we create an ad hoc committee, we'll say, what is it going to do? Who's going to chair it? How long does it run for? Does it need a budget? And does it need the outside resources? So, well, I'll chair it if a motion so made. It'll run till June. No budget is necessary. And the outside resources it'll need are Harvey and or Maytag and Prabhu and or Roberto and staff. Any questions before I ask for a motion?
I have one, Drew.
Yeah.
First of all, I think it's a fait accompli. So obviously, you're stepping out of the IC doesn't. I assume that you will be very involved in the VC investing strategy for sure. So this is nice to see some formalization of that. I guess my only question is, does this mean that the VC investments will go straight to the board after this subcommittee looks at it, or is it going to come through the IC? So it seems like layers.
That's a good question. Don't know, and that's why Eshvar is on the committee. I think that'll be largely up to Eshvar and Prabhu as to what that is. As Prabhu says, because we think so fast, we want to delegate. And then the question is, how much is delegated to the IC and how much is delegated to staff and how much is delegated to staff and the IC? Don't know. That's the question is why we need the ad hoc committee. You're smart woman, Sunita.
Oh, no, that's not my question. I think I understand why you created it. I think the question is, I think it'll be inefficient if the policy requires the ad hoc committee to recommend to the IC and then the IC recommend to the board, rather than the ad hoc committee going straight to the board.
Well, the ad hoc committee, because it's ad hoc, won't recommend anything about investments. It's going to recommend the process by which we do what you're asking for in the future. The board can delegate to committees, but the board really couldn't delegate to Howard and I. So we use the phrase kitchen cabinet. In the future, Howard and I, and whoever our successors are, probably our kitchen cabinet to Prabhu and his staff. You know, maybe David will call and say, Drew, do you know everybody over at Benchmark? And I'll make an introduction. Is more like, you know, but then the actual recommendation of the investment is not something that we want. Right. I mean, the IC exists for a reason. Anyway, so don't know. That's why we want to form a committee to ask all these questions and answer them. That's why it's so important that Eshvar be part of this ad hoc committee. Eshvar, do you want to weigh in on this?
You know, you know, maybe Javi has a view in terms of procedurally what the best way to do it is. But I do know that, you know, in certain cases when there's not an IC committee, because we don't meet every month, we do go directly to the board. And maybe that's the same process we do here, because if there is an IC committee meeting, you know, we can discuss it or just bring it up. And, you know, and if there's not an IC committee, it goes directly to the board.
If I can just clarify, make a clarifying remark too. I know several hands, I see several hands raised there, but if so just to clarify, Trustee Sunita's question, just the, you know, so procedurally right now we are not required. So the board, only the board has the authority to approve venture investments. And this is something that the decision was made 4 years ago. But in practice, we've taken it to the IC. And then, and as, you know, Trustee Menon just said, if we don't have an IC meeting, it'll go directly to the board. So our understanding was that this will actually go to the ad hoc committee and then go to the board. So just to clarify that procedurally, but we can fashion it in any way we want. Yeah.
Go ahead, Harvey, you got your hand up. Jump in.
Well, as I understood the proposal, the ad hoc committee is essentially a study group at this point to try to determine what is the most efficient and effective way of dealing with VC investments. We have charters in place for the board, for the IC. We have a practice in place, as Eshwar just explained. Those will continue to be until this committee, which is of limited duration and has no power in itself, comes up with some recommended actions that will go to the board in terms of how the best way will be to handle venture capital investments. But as I see it, it is a study group, and we'll come back with recommendations about what is a good process. Should we keep what's in place now? Should we formalize the IC's role? Should we create a greater delegation of discretion in this area that we don't have at present for staff? And that's the purpose of the ad hoc committee. Is essentially to study this and come up with the best process. Do I have that right, Chair Lanza? Oh, and the other thing, just procedurally here, just as I've explained to Drew has the authority as board chair to appoint the committee, an ad hoc committee. So that doesn't need a board vote, but he's not allowed to appoint himself as chair of committees. And so if he wishes to be chair, that'll have to be done by motion and a board vote.
Thanks, Harvey. You know, it's kind of funny, Sunita, but my impetus, it's really kind of Prabhu driving this. My impetus was, remember we had that fun lunch, that dim sum lunch. It was beyond stupid, Sunita, that you and I couldn't both be on the IC at the same time. But of course we can't by law. So that's not stupid, right? We can't have a quorum of the board. But 90% of me sitting in the IC meeting went over my head. It wouldn't have gone over your head, right? You're in that business. But the 10% that came to me, VC, you wouldn't know anything about. And so as I sat in those IC meetings, I thought I shouldn't be here. Sunita should be here, but I need to be here because there's every 10% is VC stuff, and it's only Howard and I that get it.
Yeah, you're preaching to the choir. You're preaching to the choir. You're preaching to the choir. I said, I think this is brilliant. I'll propose a motion.
I'll second
Great. Move to approve it and make me chair, please do.
Proposed to a motion to make Drew Lanza chair of the ad hoc committee.
Second by Santos.
By Santos, go around the room. Andrew?
Aye.
Aye.
Suja, aye. Eshwar?
Aye.
Yes.
Franco?
Aye.
Dave?
Aye.
Drew, I'm aye as well. Final thought for the record, I helped get Anurag, another VC buddy of mine, unfederated. And part of this ad hoc committee will also deal with how do we maintain some VC blood on our boards going forward in time. And that actually relates back to what I said about Prabhu being charming. I know Prabhu's done such a good job with VCs that some of the people he's met with, we could probably start recruiting for the boards. And that will be good to keep a little bit of VC blood in our boards. Back to you, Prabhu. Keep driving.
Thank you, Mr. Chairman. So we are going to discuss quarterly performance this morning. And for that, for 2C, I'm going to turn this over to Casey Boyer from Neuberger Berman.
Yes. Hi, everyone. Thank you for having me again. Always appreciate being able to present to you all quarterly. Let me pull up the presentation and I will share it. Okay. Great. So we are in September, but we are reporting Q1 performance today. Want to give you a little bit of background on performance of Q1 and kind of some early look into Q2 as well, as we've received some information on that front also. So turning here to page 2, which is the summary, we're showing both legacy investments, which are the private equity investments made prior to the Neuberger strategic partnership, and then obviously the performance of Neuberger and on a combined basis as well. So for Neuberger, you'll see an overall performance at the bottom there, a net multiple of 1.9 and a net IRR of 34%. We have some benchmarking a little bit further in the presentation where you'll see how that compares to your peers, to your earlier points on absolute performance versus benchmarking. Of course, we think that absolute performance is really great, especially this early in the program, and the fact that we are continuing to put capital to work each year. So this is including not just investments that have had time to mature and produce return, but also investments being made each quarter. So you'll see in terms of performance, your net asset value for the quarter was at $312.8 million. So far, we have distributed back to the program $34.2 million. Importantly, after Q1, we distributed another almost $10 million in May. So you'll see that number for Q2 go up to just over 44 million, or just under 44 million, excuse me. And then we actually right now are looking at making another distribution that would be a substantial one. So we're hoping that now the portfolio is in a position of more maturing so that we're able to make more distributions back to the program. Moving on to page 3. I won't go through all of these next few pages. From pages 3 to 7, we show the underlying fund performance. And then you'll also see on the right-hand side how that performance benchmarks to their peers in the industry. So pages 3 and 4 are the benchmarks and performance for the legacy investments, and then pages 5, 6, and 7 are for Neuberger. You'll also see we did add in the last quarter these up and down arrows. This is just meant to show you a little bit more visually and a little bit easier to compare between the quarters of how performance changed from the prior quarter. Of course, a lot of these vintages are still very early, so we expect a lot of these to continue developing. You'll see here the contributions as well as how much we committed will give you an idea of how far along that fund is in their investments and how much further they have to invest. So turning to page 8, this is a little bit more information on the actual exposures within your portfolio. So you'll be able to see this on both a committed capital basis as well as an invested basis. Committed being, those are the investments that we have approved and have committed into your portfolio. Those investments draw down capital over time, so you'll see that difference between committed and invested capital. The most apparent difference is with the investment type, primaries, co-investments, and secondaries. You can kind of see how we're committed here. We're about 70% primary funds and 30% into co-investments and secondaries. Co-investments, if you look here over the invested capital, they put money into the ground immediately. So you'll kind of see the difference here as the primary funds continue to invest over time. In page 9, as I mentioned, this is where you'll see a little bit more of the benchmark information for your entire program for Neuberger specifically. So here at the top, we've broken out performance on an underlying basis, on a gross basis for primary funds, secondaries, and co-investments. And you can really see how those types of investments help your portfolio. So obviously primaries are going to be very consistent and develop more over time. We would expect these numbers to go up as they invest more capital and as they mature. And then co-investments, they really do, they go into the ground immediately. It's into one portfolio company. And so we're able to see a higher generation of performance at an earlier point in time. I would say the one of the positives for this quarter were the co-investments actually reaching half of distributions to paid in, meaning the program has received 50% of the capital back that we've actually put into co-investments. And then here at the bottom, you'll see the benchmarking of your performance to the peers. Last quarter, we were first and first, so we did drop, and you'll notice here that difference. Really, it was, you know, literally 0.01 away from being first quartile. So hopefully that'll turn back around next quarter, but at the moment, we're very pleased with the performance and see that there's a lot of strong momentum in the underlying investments. So I will open it up to questions.
Good. Floor is open.
I got a question, but it's more directed to our staff, probably in staff. Remind me, so when we get distributions back or waiting for them to withdraw funds, the money's just sitting in proxies?
Hi, this is Dinesh. Yes, so any money that comes back would go into the Russell 3000 proxy until it's deployed into actual private investments. That's correct.
Okay, thank you.
Sure.
Any other questions? Back to you, Prabhu.
All right. Thank you, Casey, for your detailed presentation. And with that, we will move to 2D, and I'm going to turn this over to Laura.
Great, thank you. I will share my screen here. All right, so we have the first quarter 2021 public version of the private markets report for the other asset classes that, that Casey didn't talk about and doesn't advise on. So we have here the private debt, real assets, and real estate portfolios. Starting with the private debt program, you can see that the target allocation is 3%, and the private debt allocation on an actual basis is at 3.2, so very close to target. In the lower right corner of this chart, you can see the program's internal rate of return of 6.2% remains lower than the peer universe. And if you recall, that's largely an artifact of some legacy funds. If we take a look at funds that have been committed in more recent vintage years under your current staff on page 5, and take a look at the far right, where you can see the IRR for the funds versus the peer IRR, you can see some quite strong returns for funds in about the last 5 to 7 years. In terms of the real assets program, on the lower right here, you can see that the program's IRR is nearly 10%, which exceeds the peer universe IRR of 8.7. And then taking a look again at individual funds here, it is a quite young program, only began in 2016. So you see some not meaningful returns, but in particular, the Brookfield Infrastructure Fund is above its peer IRR. Lime Rock had a quite strong return recently. Now oil prices have changed and there's been some natural resources stress. But again, these are quite young in their life in terms of the real assets program, and the total fund IRR remains above the peer IRR. Taking a look at the real estate program, lower right corner, you can also see that the fund IRR of 11.3% is above the peer universe. There was one new commitment to Torchlight, a North American private real estate debt fund in the amount of $9 million during the first quarter of 2021. And you can see the list here of funds that have been committed over time since 2012. And again, you can see some strong returns, in particular for DRA and GEM recently. There were some negative currency effects for some non-US funds like EPISO 5. But again, strong returns overall for this program and exceeding its peer IRR. In terms of the private equity program here, venture capital in particular, the returns aren't meaningful yet. There are no commitments during this first quarter of 2021, and the 3 funds in the program thus far are all too new to have meaningful private markets returns thus far. We have a lot of other types of market data on pages 22 through pretty much the end of the report. I won't go through that data in detail, but if you're interested in the current dynamics of private debt or private real assets or private real estate, please feel free to take a look. So I'm happy to answer any questions on these parts of the portfolio.
Hey, Laura.
Floor is open. Go ahead, jump in.
Okay, yeah, thank you, Drew. So just one question. You mentioned the foreign investments, I guess, by one of the funds. Is it typical that these, I don't know, I think it's a real asset or real estate investment. Do they not typically hedge currency?
It depends, and I'll defer to the internal investment team as well. Typically, it's difficult to hedge the total investment, mainly because they're calling cash flows over time and distributing cash flows over time, and they don't know exactly when the exit is going to be. So that can be pretty difficult in terms of currency. Some do hedge opportunistically when they have insight into when there's going to be a cash flow, but it's hard to do it for the full program.
Okay, and I'm thinking was just given that for these, you're typically trying to get maybe a high single digit kind of return. And if you don't hedge currency, maybe that's a substantial risk. I mean,
it is a risk. Yeah, actually, I'm just proofing a currency hedging paper for Makita right now. The focus is more on total hedging, but you know, there's pros and cons because having currency exposure does provide diversification. and different returns that zig and zag in different ways. So that can be a good thing, both in public and private markets, but in an environment where the dollar continues to dominate, that can be a negative overall. So a lot of plans that we work with, when they get to a certain overall percentage of non-US currency exposure, they might think about a total fund hedging program. But typically there's a lot of hedging going on with the underlying managers individually. So getting a handle on that before making plan level decisions makes sense.
Thank you.
Floor is still open. Anything else for Laura? Back to you, Prabhu.
I can share it again
Buddy.
here. So I can move on to the total fund report, if that makes sense.
Do it.
All right. Okay, we have here the quarterly review as of June 30, 2022. So a very brief market update through the end of June. I know you've seen this chart before, and now it's updated through June 30th, but 2021, you had a market environment where almost every major asset class has had a positive return. We were already in a rising interest rate environment, so you do see some negative returns in 2021 as well for the Bloomberg Aggregate Index, which is investment grade bonds. But then in 2022 through June, we had, one of the worst starts to the year for both equity and bond markets in many, many years. Commodities were the only positive through the end of June, and we've since seen some falling oil prices. The month of July was overwhelmingly positive with high single-digit returns for U.S. equities. August has been negative thus far, not as negative as July was positive. So your CIO mentioned an estimated positive return for the fiscal year thus far. But you can see that the first 6 months of the year were really quite negative, down 20% for the S&P 500 index. You did actually see a little bit of protection from things like emerging markets, but it's unusual for us to have such a high correlation between equities and bonds. On the upside, that was a good thing when equities and bonds were rising for most of the calendar and fiscal year since the global financial crisis. But we do now have an environment where diversification into things like private markets and hedge funds really matters for the first time in a long time, since you did have such negative returns for both public equities and public investment grade bonds. In the interest of time, I'll skip to your specific plan. So if you take a look at asset allocation on page 31, you can see that the total balance, total market value as of the end of June was 4.6 billion, and that asset classes and asset allocation were quite close to their policy targets. And taking a look at performance, while we do have negative numbers, they generally outperformed all of the benchmarks that we look at. So you had a strong manager alpha from individual strategies that have been selected by the investment team. You have either top quartile for the 3-year period or close to top quartile returns within the peer group, which are the lower numbers there. So you can see for the 1-year period, peers were down about 7.5%. Your fund was down 5%. And outperformed the policy benchmark, the investable benchmark, the low-cost passive portfolio, significantly outperformed a 60-40 benchmark made up of the ACWI Equity Index, which is all country world, and the Barclays Global bonds. So that benchmark was down almost 16%. And again, your fund was down 5%. If you take a look at the individual asset classes, you see a huge amount of protection from private markets during this downturn. So private markets up 15% if you exclude the Russell 3000 assets, where some assets earmarked for future private markets commitments are housed. Private markets X the Russell 3000 was up almost 26%. Private equity, venture capital, private debt, private real assets, really across the board, you see quite strong returns. Taking a look at other asset classes, emerging market debt, you have a manager in emerging market debt that is a long short strategy, so a hedge fund, and it was in the first percentile of its peer group. So you do see a positive return for emerging market debt and a positive return for your low beta assets as well. Market neutral strategies in particular has some sort of more long volatility and trend following strategies that had incredibly strong returns. And you can see a first percentile peer group ranking for the relative value funds. The other asset class category also had a positive return for the 1 year period and outperformed its benchmark, largely because of the core real estate holdings being up 28%. Tips also, if you recall, you used to have some exposure to market rate tips, market duration tips were down, but you have short duration tips in your portfolio, so they weren't as negatively affected by the duration situation with rising interest rates. We have a lot of individual manager returns, but in the interest of time, I'll skip to some broad measures. So you can see here on this slide, on the left side, you can see the total fund return being well above median. You can see the standard deviation in the second column remaining below the median, so less volatility than the peer group, which resulted in a top quartile Sharpe ratio. So with that, I'll wrap up in the interest of time, but happy to discuss anything in more detail on the total fund for the fiscal year.
I do have one question on page slide 54. I always get confused, allocation effect versus selection effect. Can you explain that to me? Remind me what that is.
Yeah, so the allocation effect is whether the plan was over or under allocated relative to its target to a particular asset class. So having more money in cash during a market environment where holding cash was good because markets were down had a positive allocation effect, for example. So even though the return was the same as the index return for cash, just having more cash was a good thing allocation wise. So selection effect then is the managers that you select. Selection effect can also be a little bit like asset allocation effect if, say, you have more exposure to small cap value through your managers than small cap growth, for example, or something like that. So, you know, as an example, you can see a green positive selection effect in emerging market debt. And that's largely driven by that emerging market debt hedge fund I mentioned that was in the first percentile of its peer group. Also market neutral strategies, that's the selection effect of having a lot of strong performing hedge funds. That's why you see the green bar on the right there.
So,
yeah.
So selection effect, when you mentioned managers, does that include, you know, it definitely includes the active managers. What about passive? Does that fall in that category too?
It does. So the passive managers should generally have the same return as their benchmark. So you wouldn't see much of a selection effect.
Okay. All right. Thank you.
Sure.
I have a question on page 33.
Sure.
I guess you were talking about how the private markets have outperformed, ex-Russell have outperformed or done really well. I can see why, say, the private debt portfolio, which is generally floating rate, and real estate has done well. I'm just curious whether the private equity piece, which is sort of 9% of the portfolio, are those marks just lagged? Because I'd imagine that there's a big correlation between the NAVs versus the public markets, and it's already June 30th. So that number really stuck out as strange.
Yes, so these are lagged. So they go through the private markets valuations for your fund and, you know, all of your peers as well. Just go through March 31st. So you do have those first 3 months of negative returns, you know, baked in there. However, you know, it's just, to your point, a less volatile asset class because you're not valuing it as often. Typically, most of the managers are valuing their portfolio holdings about quarterly. And so you don't have the same amount of fluctuation. Also, you know, we might have a market downturn at the beginning of the year, but that might not flowed through yet to, you know, for example, you know, real estate building valuation because the markets haven't been negative that long. And, you know, so there really is truly less volatility in private markets assets because they don't trade as often and you don't have a lot of investors getting spooked and pulling their money out like you might in a public mutual fund because these are locked up assets, but then you also have less volatility because of just the sort of valuation accounting effect.
Okay. I mean, what was also curious about this is the custom PE benchmark is negative. So I just wonder if this is something to do with the way we are you seeing this with other clients, or maybe something we can take offline and really dig into why ours alone stood out? Just makes me a little skeptical.
Yeah, it's pretty, when we look across our client portfolios, one of the biggest drivers of who did well relative to peers and who didn't was just private markets exposure. So it was quite common in the last fiscal year for private markets, the amount of private markets exposure and how positive that was for funds to be a big driver of overall returns.
Okay. One last question before I hand it off to somebody else is, there's been a lot of, I don't know if industry is buzzing with it or more sort of strategists, the value of 60-40 sort of falling apart this quarter. Is there any wisdom from Makita or thoughts from, your investment strategies for the pension industry, so to speak?
Yeah, that's yes. I mean, that's a major topic that that everyone's talking about, because for a long time, and a lot of your boards, I think, have pretty sophisticated investors and business people on them. But a lot of the boards we work with, there's just people that are investing their private portfolio, or their personal 401k in an S&P 500 fund and an index fund in bonds, and you saw a lot of headlines and stories about some of the best performing institutional funds just being into index funds as well, a 60-40. And so it's been, all of us who study financial theory know the value of diversification from a mathematical perspective. And but it wasn't working for a long time, because you had that really strong positive correlation between equities and bonds, and you had strong market environments. And so, on the one hand, it's nice to see diversification mattering again. A lot of clients we work with have done things like you have in terms of having the relative value exposure, and some of our clients call that risk mitigating strategies. They have things like global macro hedge funds and trend following and long volatility funds that are sort of there for a rainy day. But they hadn't really been tested yet. And in this market environment, they have been tested and luckily have shown their mettle, and why we have those types of assets in a portfolio.
Got it. Thanks.
Should I move on to healthcare?
Yeah, floor's open. Any other questions for Laura before she moves on? All yours, Laura.
Okay, so let me get to this other. Here we go. Okay, so I will be quick on this, since, as you know, it has the same assets and just a more liquid public markets asset allocation as the pension does. If we take a look at the healthcare fund, as a refresher, your healthcare fund has an expected return that is quite close to that of the pension. It used to be exactly the same. Now the actuarial target rate of return for the healthcare trust is lower, but that said, it's still a very sort of comparatively risky plan relative to other health and welfare trusts in the peer group. When we have a really strong market environment, that means it looks fabulous because you have a lot of equity. When we have a negative market environment, that means on a peer relative basis, this healthcare trust with a higher risk level than a lot of peers is going to look a little bit more stressed. So I'll show you that in terms of performance. The current balance is about 245 million, and it has the same sort of makeup in terms of growth, low beta, and other assets. But of course, all of the growth assets are in public equity because this fund needs to stay liquid. So not having the diversification from private equity, and then in low beta, not having any diversification from hedge funds meant that there wasn't much insulation from the public markets drawdown during the last year. So you can see a one-year return of negative 9.6%. If you recall, we looked at the one-year return for the peer group for pension funds, which was much more negative than this negative 9.6%. But when we look at the peer group return for $50 to $250 million health and welfare funds, you see a peer return for the 1-year period of -8%. So this fund lagged the peer group. It was just about in line with the policy benchmark, which makes sense since a lot of these strategies are passive. So you're not seeing a huge amount of manager alpha. The story is the same as the pension in terms of public equities being down and low beta and other being up for the year. So luckily we do have some diversification in core real estate in this fund. It's the core real estate isn't as, 100% liquid as the rest of the assets, but it's typically about quarterly to 6-month liquid. So having that in the fund was really positive, and then also having diversification from commodities. Commodities lag their benchmark because this is a long neutral strategy for commodities, which means it's going to protect in down market environments for commodities, not quite keep up as much on the upside, but having that diversification in terms of core real estate and commodities kept this return from being even more negative. So I'm happy to answer any questions on the healthcare trust.
Floor is open. Any questions for Laura? Any questions overall for our team or for Laura? Great, good to see you again, Laura.
Good to see you too. Thank you very much. Have a good rest of your meeting.
It's good to be on a winning team, as I say in French. Item 3A was the issue with the second member for felony forfeiture, Kenneth Williams. That's been postponed. It's been postponed 2 or 3 times. This time it was not postponed due to Mr. Williams. Something came up with his attorney. It was very, very reasonable. And Harvey and Maytag said, yeah, let's go ahead and grant a delay in that. Hey, Harvey, do you have any idea when we might hear that?
I expect we'll hear it in October.
Great. Thanks, Harvey. On to 4A, Roberto, the floor is yours.
Thank you, Mr. Chair. Good morning, everyone. Just if you bear with me, just a couple of updates. From the staff standpoint, we are going to be welcoming next week 2 new benefits senior analysts. They're going to start working at ORS. We are also promoted Tara Tran to a health analyst position. So congratulations to Tara, who started working with us early in the year in the spring as a pension staff specialist. And, she came to us with a lot of experience in the pension world, working with the United Nations pension program for about 6 years. So congratulations to Tara. And a big welcome back to Giselle Holcomb. Giselle was actually an analyst that was working at our office when I joined in 2013. She was here from 2009 to 2014, and she's back with us. So welcome, Giselle. I also wanted to let you know we are planning the open enrollment. As you know, every year open enrollment happens the month of November 1st to the 30th. It's actually in progress. Open enrollment packets will be sent sometime next month. At this point, barring any unforeseen changes in the pandemic, we are planning an in-person health fair. And so we will keep everyone posted on that. Again, we don't expect any changes, but in case something happens and we have to pull back the in-person health fair, we will certainly notify all the members about it. The city recently extended their mask requirements through Friday, September 9th. So I just wanted to let you all know. We are, as you know, have opened to the public between 9 and 4 p.m. for the longest time. We still are relatively open and working from the office today. But I just wanted to share with you, we have some situations with strangers wandering around the building the last couple of months. And so we have elected to close the front door. We do have a sign, so members are still welcome to come in and knock on the door, but we have kept it closed for the safety of our staff. And then a couple of more things will be closed on September 5th and observance of Labor Day. And lastly, I wanted to let you know, as I mentioned in the last meeting, there are 4 positions, trustee positions that are coming up for reappointment at the end of November, 3 from public members and 1 retiree seat. We were told you should be receiving an email from the city clerk office today, being that today is September 1st, 90 days before your seat expires. And so again, be on the lookout. If you do not receive either today or tomorrow an email from the city clerk, let us know. And we're trying to get the timelines and the deadlines for you so that we can keep you apprised as much as possible for your process in the event that you do elect, and we hope you do, reapply for your position. There are more specific requirements and situations as it relates to the retiree seat. And Trustee Santos, know we have been in contact, and we continue trying to get as much information as we can to keep everyone updated and apprised. That concludes my update, Mr. Chair.
Roberto?
Yes.
Harvey has his hand up.
Yes, I am aware of that. I don't know if he has a question for me or wanted to speak to the chair or what. So Harvey, is the question for me about the update?
Just on that last item, if I may, Mr. Chairman, I just want to, for planning purposes, tell the members of the board whose terms are scheduled to be up in November that under law, if there is a gap period between the end of your official term and either you being renamed or someone else being named to that, if there is a gap, that if you are willing, you would continue over in holding your seat until you are renamed or a successor is named. Now, of course, that's voluntary on your part, but that avoids a vacancy on the board. You would continue to serve until a new term begins.
Thank you.
For your planning purposes. And it would be helpful to know if your intent would be to continue to serve if that were to happen. Thank you.
Thank you, Harvey. Mr. Chair, if you allow me, I just wanted to also, we'll have more staff updates in October. I don't have the specifics, but we are aware that we are going to have some members either leaving the office or actually changing to a more part-time approach for personal reasons. And so once we have all that information, I will make sure to keep you updated at your October meeting. So just want a heads up, and thank you very much.
Great. Any other questions for Roberto? If not, 4B, usually Councilwoman Pam Foley addresses us. She sent a nice note to Roberto saying, hey, sorry, I had to duck out for a meeting. And further on said, there's not much to report. City's doing well, and we'll see you next month. So we're on to 4C, action on compensation for the CEO-CIO position. We met in closed session at the beginning of this meeting to make sure we were all generally in agreement with the performance reviews for Roberto and Prabhu that were done, Roberto on Monday of this week and Prabhu on Tuesday. A brief overview of this for those of you watching from home. We did Measure G a couple of years ago, so the CEO and the CIO report to the boards. We do their performance reviews. Their salary is still within the salary system of the city, and we'll have Andrew talk about that in a minute or two. There is a subset of the board that serves as this board's compensation committee. That's the Joint Personnel Committee. And on that committee are the 2 chairs of the boards, myself for Police Fire, Spencer for Federated. The 2 of us gave Roberto his review on Monday. Also the 2 chairs of the IC committee, Eshron on our board, Anurag on Federated. And then we were very fortunate to have Andrew as well, because this year, the fact that we're within the city system mattered deeply. So I will talk briefly about Roberto's overall performance, and then I'll let Eshvar talk at a very high level about Peru's. So I have the experience of now I'm sitting on about 9 or 10 boards, but I'm sitting on 7 boards where we have CEOs, 6 in startup companies, some of which are pretty big, 100 people, for instance, in one. And so for those of you that are not currently involved in managing a company or a team like Roberto manages here with Prabhu and Barbara's help, things are weird out there. And I mentioned in closed session our board, there are 2 confluences of major factors happening right now. And so normally you'd say, well, the CEO, we're going to review him on what did we tell him to do, and did he do it, and how well did he do it? But as we spoke with Roberto on Monday, that's not the gist of Roberto's review. These 2 factors are COVID, which are just really coming out of the pandemic now this year. And that had the effect, as I said in closed session, of causing a lot of companies, we say in the Valley, the VC community, they lost coherence. You know, there's corporate culture. Their teams see each other in person. You can, I coined a saying the other day. I said, you know, you can smell fear, but you can't see it over Zoom. And there's some truth in that. And so the fact that we were operating virtually required smart teams and smart CEOs, and Roberto is this guy, if he's nothing else, a smart CEO, to exert countervailing measures to maintain coherence. And I can tell you that of the 7 CEOs that I currently am working with, Roberto and his team are heads and shoulders above everybody else. They really, and Roberto, your ears are burning, I know he's smiling. Roberto consciously, we talked about this all the time, Roberto consciously exerted a countervailing force to counterbalance the fact that people weren't seeing each other around the water cooler. And it worked. He's got lower turnover, much higher employee morale. We actually measured employee morale in the survey for his performance review this year. It's very high. The second factor is something that the Wall Street Journal has come to call the Great Resignation. And you all see this as the hollowing out of the service sector. So you go to a restaurant, for instance, and the food's late. They're short-staffed cooks. They're short-staffed waiters and waitresses. I have a neighbor, I saw in the story in the closed session, I have a neighbor who's building an addition. They're having a hell of a time getting people, carpenters and carpet layers and so on. This is not actually a COVID trend. If you go online, you can see this started after 2008. Well, we have people that are sort of in the service sector. Some of our people sort of process disability applications and so on. I think you could say are in the service sector. And so Roberto has presided over this loss of coherence due to not being in person, as well as this trend to make it hard to hire and retain lower level people. And so in my opinion, Drew Lanza, not the chairman of the board, in my opinion, and it matches Spencer's over on the Federated side, their chairman, Roberto has done an absolutely stellar job this year. Not because we told him take the cat out and water the garden, right? But because he correctly focused this year and last year on these threats to his staff, and he's managed to maintain his staff. And I told him this to his face, Roberto, you've done better than any other CEO. In fact, across our portfolio of 30 startups, Roberto, you're in the top 2 or 3. And for the same reason they are, because you saw this tsunami coming and you dealt with it. And best of all, I'm sure Linda and Michelle can test this, and we had fun, right? I mean, we're joking and kidding around, and that's part of the esprit de corps we need to maintain in this time. Eshvar, I don't know if you want to make some high-level comments about Prabhu and the review that you and Anurag gave him.
Yeah, thank you, Drew. So I would say that looking at our board and the Federated trustees in general, would say that Prabhu has done a very good job. And it is in terms of leadership, in terms of, what Drew talked about, the Great Resignation. Most of the staff has stayed. And I think earlier in this meeting, we had a discussion about where this fund was a few years ago, where compared to where the fund is today. And clearly it's substantially different in terms of performance. We were kind of bottom decile, and now on a both 1 and 3 year basis, we are top quartile. And that is in terms of performance metrics and also risk adjusted performance metrics. So we would rate the overall performance, by the CIO Prabhu Palani quite highly. Now, as we go forward, we realize that, we're going to set, and Prabhu will agree, slightly different standards. We're not going to compare with the way we were before, but we're going to compare it against a peer group. And so far, those metrics, continue to be very good. So I think we have come quite far. I think the fund is performing much better for its retirees, and that is the place that we as trustees would like the fund to be, to protect the future retirement benefits for our members.
Great, thanks, Eshvar. So this is more information than we would normally reveal in public about the performance review, and you're probably wondering why we're doing that. So there's a force, and you heard Eshvar talk about me. We believe, both boards believe, we've measured members' opinions, staff opinion, boards' opinions. We have Roberto and Eshvar and Prabhu's own self-assessment. They really knocked it out of the park and are doing just an absolutely fantastic job. However, there's a countervailing force, and you heard Laura Work talk about it. Look, the world is not doing too well right now. We're in a recession. Whether we are or not, it certainly feels like one. The markets are down. We've got high inflation and so on. And so and not just at San Jose, in all of our startups, the same problem. It's hard to raise money. VCs slow down when the public markets slow down. And so just as there is all throughout all of my companies, there's pressure to keep down raises and bonuses this year. And so what we tried to triangulate on, and we'll have Andrew now go, is can we triangulate on sort of a range that reflects the high opinion we have of the work that Roberto and Prabhu have done, but doesn't somehow conflict with this notion of austerity. So you want to talk sort of, Andrew, maybe there's a range we want to propose to approve by the board. And by the way, remember, whatever we do here, board, Federated has to ratify. So we did last year, we sort of gave Federated a range, and then at their board meeting in 2 weeks, they picked from that range. So I would suggest we could think about starting with that. Maybe Andrew, you have some thoughts. And Andrew, also explain how the city's compensation system works to our crowd. Did we lose?
Andrew, you are mute.
Thank you. I'm done. Thanks. No. So no, Drew, I appreciate the opportunity. Yeah, I'll definitely give you a little high level understanding of how the city's NPP process works and just the general wage increases, for the executive staff, directors, and chief level. So usually around July 1st of every year, there's typically a general wage increase that the city provides. For a lot of the city members, they're part of a local, and those wage increases are negotiated. For the high level executives, of San Jose and the leaders of each department, they're not represented by unions, and so they're grouped in together what's called Unit 99. And the city will let Unit 99 and those people that belong to it what their general wage increase. For the most part, it typically mirrors what non-sworn employees get. But this is solely the discretion of the city. It's not guaranteed from year to year. And, last year it was a 3% raise. This year, they were granted a 4.5% raise. So what's a little bit different is Unit 99 employees have the opportunity to get a MPP done, which has an associated merit increase based off of their ratings. And as Drew and Eshwar has talked about, both Prabhu and Roberto have continued to exceed expectations and have, definitely provide great leadership for us. And so, because of that, the city has some parameters or guidelines, just say more guidelines on what those merit increases should look like. They typically, recommendation is somewhere around 2.5% to 3%. But there is some flexibility in there. In the past, probably about 4 or 5 years ago, when we had Chair Sinceri still on board, we started going outside that range, or in the 4 to 5% range. And then we came to the realization, a few years ago, is we got such high caliber, CEO and CIO that they need to be paid appropriately in their pay scale. And so one of the flexibility, that we've had is to use this opportunity to give them larger merit increases to get them in the correct part of the pay scale that we believe they deserve, which we believe they deserve to be towards the top. And so the following years we gave 5%, and then last year 10%, So now they are at the top of the pay scale where we as a board believe they should be, based off of their performance and the comparables to other CEOs and CIOs in the public sector. So now that we're there, so the question is, okay, how do we go from here? I feel like we need to bring things back more closer to the city policy. I do believe they deserve more than what they should, because they continue to exceed all of our expectations and provide great leadership. But I feel like we're in this limbo where the JPC will be starting off in 2 weeks, kicking off and developing an incentive program, for the CEO, CIO, and investment staff, that will provide, an opportunity to, get some bonuses based off of different metrics. So we're trying to create this new system, and we're trying to adhere to the city's the current system. And I believe we're right in the middle right now of where we're trying to go. And so, with that in mind, I believe that we should be looking at, somewhere between a 4 to 5% range that we should work with Federated on, and providing that for Roberto and Prabhu. Now,
Andrew, a question. I'm sorry.
Yes.
Just for clarity, when you say 4 to 5% range, you're talking about the merit portion on top of the 4 to 4.5% that the city already has increased.
Yes. Yes.
Thank
So,
you.
I mean, by the city's guidelines, we off the MPP, we'd be giving them a 3%. Okay. And so I believe we should be getting something a little bit higher, and that's why I'm looking at the 4 to 5% range. One thing that, a little more color I want to add to is, when we give these MPP merit increases, and let's just say they were not at their top range. Let's say, they're at 80% of their top range, and we gave them a 5% merit increase. That 5% merit increase would go into a pay raise, and that will affect his pay scale or base pay going forward. Once they hit their max of the ceiling of their pay range, that 5% can no longer bump their pay scale up any further when it comes to MPP. The only way we could do that is if we judge their salary range, which we are in the process of we're going to start doing in a couple of weeks. So what happens is that 5% will be given to them as a one-time payout. So it won't be an ongoing, pay raise where it will be compounding year after year. It's just a one-time payout. And for Roberto and Prabhu, whatever we agreed to, that's how it's going to be awarded this time. Next year, it'll probably be different because, we are doing a salary survey for both the CEO and CIO position. And based off of that, we as a board might adjust the salary range, appropriately based off the survey and comparables. So Drew, my recommendation is that we appoint you and Eshwar as labor negotiators for the police and fire board. With depending on what feedback I hear from other people. And we'll provide you a range that you could work with along with Federated. And you could come back to us, next month with whatever was decided.
And you think that 4 to 5% range politically is palatable to the people around us?
I do. Because one, it's not a far reach from, the city's, guidelines. But we also, we heard Prabhu talk about earlier today, over the last 3 years, we went from the 99th percentile to, top quartile. And through that process, $975 million, in assets was, increased. That's just one example of things that have been done, under the leadership, of Roberto and Prabhu. And they deserve more. They absolutely deserve more. And so, but I think, with where we are, with what you just mentioned, and us trying to figure out and implement a new incentive program, that, I think this is a great middle ground.
Great. Before we open the floor, I can say, and I'll turn to Ishar, I can say that Spencer and I have talked about numbers in that range. And so I think Federated would accept that. Is that sort of the range that you and Anurag talked about, Ishar?
Yes, Drew. It's the same range.
Great. All right. So maybe let's have you, Ishar, and Andrew, Spencer, Anurag, and myself all set up a meeting in the next week or two. And as negotiators, we'll put our heads together and see if that'll fly with Federated. Just for timelines, I talked about this in closed session. Our next board meeting in October is one day before the deadline for giving all these numbers to the city. So having it locked down at the Federated board meeting 2 weeks is great. And then at our board meeting in October, when Federated picks a number out of that range, we'll ratify that number. But by giving them range, we're saying we'll ratify a number if it's in that range. The floor is open. Andrew's suggesting we say Federated pick a number between 4 and 5. Any thoughts, comments, questions?
Mr. Chair?
Yeah, sure, Dick.
I listened to you and Andrew very carefully, and I appreciate all the homework you have done, and of course our board listening and weighing in. Here's the deal. Our council liaison should be able to be helpful in this case, because we're trying to change the tradition of civil service here. We're trying to say, here's some incentives, because like the old cliche, show me the money. Well, if we're making the money, we need to make sure that the people in charge are being compensated. So I hope that Ms. Foley will be involved and kind of educate the council and what your concept is, Mr. Chair and Vice Chair. I totally agree with what you're doing, and I think it's about time that we make sure that we take care of the people who are taking care of the fund.
Thanks, Dick. I know we've seen this in civil service before. There are some public universities where the football coach, because he brings in all the television revenue, makes more than the president of the university. It is certainly true in my side, private sector, the highest compensated person in a startup company is not the founder CEO, it's the guy that sells the most stuff. the highest base salary is CEO, but then man, the sales guys often have their compensation is based on that. So do you want to make that as a motion, Andrew?
Yeah, I'll make that as a motion. Is there anybody else that wanted to comment before I do?
Let me just raise a point. Because Drew was talking about coming back to ratify it after the federated meeting. Mr. Chairman, if the motion is made for this board to accept increases in that 4 to 5% range on the condition that it's acceptable to federated, then this could be the vote on that, and you need not come back to ratify it in a subsequent meeting. And then we'll wait and see what federated does. If federated satisfies that condition, then you don't have to take any further action.
Oh, that's great, Harvey. That really keeps it simple. I'll pass that along to Spencer and Anya when we meet with them.
So the maker of the motion would simply make a motion to offer that range subject to the condition that it is agreeable to federated within that range.
Oh, okay. So I will make a motion that we give Drew and Eshwar the authority to negotiate and finalize a merit increase for the CEO and CIO in the range of 4 to 5%, as long as it is agreed upon with federated.
I'll second that motion, Santos.
Excellent. I have a motion by Gardner, second by Santos. Let's go around.
Wait, can I make an amendment real quick? Is it too late to make an amendment?
Don't do it.
I also want to include, so we don't have to come back, that will also include 5 executive days, which is part of the MPP award for someone that exceeds expectations.
Dick, do you accept that friendly amendment?
It sounds friendly. I'll accept it. Thank you.
Very good. Let's go around to Andrew. How do you vote?
Mr. Chairman, you need to open it for public comment.
Yeah, is there anything public? Same. Thanks, Harvey. I'm looking to see. I don't see any hands up. Michelle, any hands up? No.
No.
Thanks, Harvey. Go ahead, Andrew. How do you vote?
Aye.
Sunita.
Aye.
Good. Howard, Eshwar, how do you vote?
Aye.
Yes.
Go.
Aye. Aye.
Chair Lanza, and I vote aye as well. Good job, Andrew. Thanks. I think I'll bet that's exactly the right answer, Andrew. I bet we'll have a good meeting with Spencer and Anya. I'll send out an email to set that up in a minute. Okay, 4D, discussion and action on committee assignments. So just to refresh our memory, we have 9 board members. We have 5 committees: investment, audit, governance, disability, and JPC, and the chair and vice chair positions. So of the 9 of us, in general, all 7 of us are chair or vice chair or chair committee, right? And when you count up the seats on those committees and chair and vice chair, there's about 7, there are exactly 17 assignments. So in general, everybody should sit on 2 or 3 committees, 1 or 2 or 3. The average would be 2. And most of us are chairing a committee. I'm chair, Andrew's vice chair, Esther's chairing IC, Sunita's chairing audit, Dick's chairing disability, Frank is chairing governance, Andrew's chairing JPC, which is chaired by somebody pretty senior because it's made up of the most important chair of the most important committee IC as well as chair of the board. So Sunita is going on the IC. That's already happened. That happened last meeting. I'm stepping back, and then David will take Howard's seat about a year from now. That would put Sunita on 3 committees, and the IC is a heavy committee. We generally listen to that. So Sunita has graciously agreed, thank you, Sunita, to continue to chair the audit committee. It's good to have somebody, I had chaired it a couple of years. It's good to have continuity there. But Sunita then will step down from the governance committee, and David Kwan has agreed that he'd be happy to step on. Do we need a vote on this, Harvey?
Yes.
Great, then I'll make the motion that Sunita's seat on the governance committee be replaced with David Kwan. That's a motion. Is there a second?
Second by Santos.
By Lanza, second by Santos. Let's go around. Andrew.
Aye.
Nita.
Aye.
Aye.
Yes.
Go.
Aye.
Dave.
Aye.
Chair Lanza. I vote aye as well. On the agenda, it says AB 361 for the board. Do that now, Harvey?
Yeah, let's do that now.
All right.
Thank you, Mr. Chairman. Before we go into the AB 361 findings, which you have in the backup material, the evidence that we're still in an emergency situation under the governor's declaration, and local health authorities are still recommending distancing for safety purposes for all public bodies. I want to bring you up to date on one potential change in the law, and I don't want to go into much detail right now. It's pretty much hot off the press. We had been following a few bills in the legislature that seek to codify the ability of boards like this to meet virtually as we have been meeting in the emergency situation. The lead bill that we were following went nowhere. Yesterday was the last day of the legislative session that bills could pass both houses. And so there was, as you can imagine, literally hundreds, if not thousands, of bills that were rushed through at the last minute with scant attention. One bill that did get passed by both the Senate and Assembly and is going to the governor for signature is, here's another AB, instead of AB 361, it's AB 2449. If the governor signs it, it goes into effect January 1st. And it creates yet another alternative to the regular Brown Act teleconferencing meetings and the emergency meetings that we've been following. It creates kind of a hybrid situation where we could continue to meet on a regular basis virtually, but only on a couple of conditions. One, a quorum of the board would have to meet physically in the same location. Second of all, anybody who wants, any board member that would want to meet remotely would have to get an excuse. It has to be on some basis. It's a very complicated bill. It's on some basis of a physical or family medical emergency that prevents the member from meeting in person. So there's a lot of permutations, but instead of having the choice of just one choice now to meet under the governor's declaration of emergency, another choice is going to be written into the Brown Act. That's kind of a hybrid situation that we will be able to work under, and that would be good for the next 3 years. We will keep you posted on how that develops. I don't know if the governor is going to sign it or not, so it might be moot. But there will be some other approach that will let some of our board members, not all, and not a quorum, meet remotely if we make the same teleconference Zoom type meeting available to the public as well. So stay tuned on that. Meanwhile, on AB 361, again, the governor's declaration is still in effect. and our local health officials, as we have put in the memorandum accompanying this message, continue to recommend social distancing. And therefore, if the board, it would be appropriate for a board member to make a motion to make the findings as outlined in the memorandum and to continue the ability of this board to meet for another 30 days, it has to be done in 30-day increments, to continue meeting the way we have been meeting under the suspended teleconference rules that we've all come to know and love. With that, Mr. Chairman, it would be appropriate for discussion or someone to make a motion to continue.
I'll go, the floor's open for discussion, then I'll make the motion. Anybody have any questions? Harvey, I might have missed it. I was sending an email out to schedule a meeting with JPC. When would those new laws take effect? January 1st or right away?
January 1st. It's not an urgency bill, so it would not take effect till January 1. I'm not anticipating between now and the end of December that the governor's declaration will be suspended. It will probably stay into effect till the end of the year, in which case we will continue to do this every 30 days.
Great. I'll go ahead and make the motion. Let's accept, I move that we accept the information provided by council that the governor's proclamation still exists and San Jose City Council continues to support that by resolution. I move that we adopt these two factual findings to use AB 361 for the next 30 days. Do I have a second?
Second by Santos.
Well, Lance, a second by Santos. How do you vote? Andrew?
Aye.
Aye.
Yeah, there was one that was decent.
Aye.
And then there was two that were Cindy's a 25-year politician, blah, blah, blah. Both were
I
don't know. I gotta see if mine is.
Who's speaking?
Somebody's on the phone. I can't hear nothing.
Yeah, can you?
That's kind of how I ended my.
David.
Schreier? He might be off. Dick?
I said aye already. I said aye.
Santos, yes.
Franco? Franco? Dave Wilson?
Aye.
I'm Chair Lanza. I vote aye as well. That's more than quorum.
Here's
Franco, there's an aye.
Well, Franco's an aye. I'm sorry, what was that, Harvey?
Just wanted to pick up Franco's vote.
Okay, great. We've got it. Let's see. Hang on, let me scroll. New business. Okay, I said it'd be a brief meeting. I think we'll be done by noon. It's 11:30 now, so let's keep going rather than take a break. Service retirements. Greg C. Connolly, Police Sergeant, Police Department, effective October 1, 2022, with 25.03 years of service. Barbara S. Fuji, Police Officer, Police Department, effective October 1st, 2022, 25.57 years of service. Elias Jurek, Police Officer, Police Department, effective September 17th, 2022, 27.32 years of service with reciprocity. Robert E. Lalonde, Police Sergeant, Police Department, effective August 20th, 2022, 25.96 years of service. T.J. Lewis, Police Sergeant, Police Department, effective September 17, 2022, 27.73 years of service. Good for you, TJ. Ronnie A. Lopez, Police Sergeant, Police Department, effective September 17, 2022, 26.96 years of service. Brian J. Meeker, Police Officer, Police Department, effective September 16, 2022, 26.49 years of service. And ding, 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 folks, we have a winner. Kendra L. Nunes, Police Lieutenant, Police Department, effective September 17th, 2022. Somebody ring the bell. Gosh, Kendra, 30.03 years of service. Good for you. Do I have a motion to approve that?
So moved, Santos.
I have a second. Who seconded that? Didn't quite get it.
Second Gardner.
Great. Go around. Andrew, how do you vote?
Aye.
Great. Sunita, how do you vote?
Aye.
Eshwar, how do you vote?
Aye.
And Dick?
Yes.
And Frank?
Aye.
And Dave?
Aye.
Chair Lanza, I vote aye as well. I don't know if any gentlemen want to say anything about any of these people.
Yeah, this is Dave. I'll make a comment. I worked with all of them. They're all great people, and I wish them the best in their retirement and live a long life so you can enjoy the book for many years to come.
That's great. Anybody else? Great. Let's see. Let's go through. Hang on, folks. Hang on, guys. I'm switching back and forth through pages here. We have deferred vested, just one. Jeffrey A. Guy, police officer, police department, effective August 18, 2022. 23.29 years service with reciprocity. Do I have a motion?
So move, Santos.
I have a second. I'll second. Lanza will second. Andrew.
Aye.
Sunita.
Aye.
Eshwar.
Aye.
Dick.
Yes.
Franco.
Aye.
Dave.
Aye.
And I'm Chair Lanza. I vote aye as well. Anybody want to say anything about Jeffrey? If not, we'll have notifications of death, and then we'll have a brief moment of silence. Notification of the death of Rudy Cabigas, fire captain, retired Jan 28, 2006, died June 5, 2022, survivorship benefits to Belinda Cabigas, spouse. I like to read these notices. I'll point out that Mr. Cabigas lived a long life because he joined the department the year I graduated from high school, and I am a senior citizen. Notification of the death of DeJohn Packer, police officer, active, died March 13, 2022, leaving behind no survivorship benefits. And notification of the death of Douglas Wright, police officer, retired November 1st, 2001, died July 14th, 2022, survivorship benefits of Tracy Ann Wright, spouse. Will now have a moment of silence. I don't know if any of you want to say anything about these folks.
Yeah, Chair Dick Santos, it's Rudy Cabigas, captain. He worked at Station 18 for years, and I knew him well. And it's sad to hear I didn't see him anymore. But even for the officers, also thank all of them for their service, and it's sad to hear.
Thank you, Dick. Andrew or Franco or Dave, you want to say anything?
Yeah, this is Franco. Just condolences to their families, and I really look for the day that we don't have to acknowledge any of these.
Yeah, amen. All right, we're almost done. Remember, at the end of the meeting, we'll stick around quickly to do AB 361 for these committees. Eshwar, anything to report?
Yeah, so we had one committee meeting in August, and the agenda items were a full discussion of part of the public markets, and this is alternative investments and fixed income that investment officer Jay Kwan did. Excellent job, Jay. And also excellent performance, which is a significant part of where we added value this year. And we had a discussion of risk like we do periodically at Veris. We have 3 committee meeting minutes to be received and filed, 2 of them in special meetings, and then 1 full meeting in June.
Great. Let me note for the record that we are receiving and filing minutes from June 2, June 21st, and July 1st. Audit risk. Sunita, anything to report?
Yeah, we had one joint meeting with Federated in August. It was a pretty low-key meeting. The only item that we had was an update on the city auditor's recommendations. Actually, there wasn't much to report there because they were still reporting, they're still waiting for information from the city auditor. But other than that, nothing much was discussed in that.
Great, thanks. Let me note for the record, we'll receive and file the minutes of June 2 and July 1st meetings. Governance, anything to report, Franco?
Nothing new to report.
Great. Let me note for the record, we will also receive the minutes of June 2 and July 1st. These are the AB 361 minutes. That's why they're all the same for every committee. Dick, anything to report from disability?
No, it won't be a Monday. It'll be a Tuesday on September 6th. Will be our next meeting. That's the oral update for me. You have the minutes from March 15th. There's attachments. And then the minutes of the Special Disability Committee meeting from June 2nd, 2022, receive and file.
Great, thanks, Dick. We'll receive and file March 15, June 2, and July 1st. Andrew, anything to report from JPC?
Nothing to report out. We are meeting, I believe, on September 9th, it is, to kick off the discussion around a couple things. The CEO and possibly the CIO salary surveys that we approved back in early of 22. We're just got those back, and so we're gonna look at that, see where the comparables are and where we're currently, how our salary range compares to them. We are also going to, part of that approval that we did early in 2022, it was for another survey to be done in regards to the Senate programs, figuring out what kind of Senate programs that are out there, and what are some common themes and how we could create one here within San Jose. And so we'll be kicking that discussion off in a couple of weeks. That's it.
Great. That was last item. Remember, everybody stick around. We got to do AB 361 after I adjourned. Anything for, if you have anything for next month, just send it to Roberto. Any public comments? Pam, you wouldn't happen to be on, would you, Pam? No, she really had a meeting to go to. All right, this meeting is adjourned. Everybody stay online. Back to you, Harvey.